Good morning and welcome to the Killik & Co podcast. Last month I talked about the size of central bank balance sheets, which have expanded quite dramatically due to the amount of quantitative easing that has taken place since the financial crisis. A lot of central banks have been printing huge amounts of money and using that money to buy bonds, and now those bonds are held on their balance sheets, so the balance sheets are much larger in size. The US Federal Reserve, for example, has printed so much money that its balance sheet has quadrupled in size since 2008. If you have a look at this chart here, you can see the size of different central bank balance sheets. And for the Federal Reserve, the current value is just under $4.5 trillion. The US hasn't actually printed any new money to buy bonds since 2014, but the bonds that it holds do continue to pay interest, and that interest is reinvested back into new bonds, so the size of the balance sheet has continued to expand. Recently, there has been lots of speculation about how and when the Federal Reserve will start to taper down the size of its balance sheet, and this Wednesday we finally got some clarity as to how and when that will happen. Janet Yellen announced that she would start lessening the amount of interest that was reinvested back into new bonds starting from next month. It is quite a significant turning point in global monetary policy. We have had 10 years of very loose monetary policy, easy money and low interest rates, and I think this does signify quite a significant turning point in that, which will be led by the US. The tapering of the size of the US balance sheet should be good for bond yields, and after the announcement on Wednesday, we did see a very small rise in US bond yields. Should also be good for the US dollar, and unsurprisingly, after the announcement, we did see a 0.7% rise in the US dollar. On the other hand, if bond yields in the US are set to rise, it does mean that assets that don't pay any kind of income are relatively less attractive. Gold is an example, so after the announcement, we did see a bit of a fall in the price of gold. This chart here shows the price of gold over the last year. If you can have a look here, it does look as though it has risen quite significantly over the summer. That is because gold is considered to be a safe haven, and because people have been quite concerned about the North Korean situation, there has been a rise in the price of gold this year. But this week we have seen quite a sharp fall, and the price has gone back below $1,300, and that is due to the announcement that took place on Wednesday about the tapering of the balance sheet. Although Wednesday's announcement did lead to a rise in bond yields in the US, the Federal Reserve did decide to leave interest rates unchanged, so the current rate will remain at 1.25%. However, the common consensus is that there is a 50% chance of one more rate rise this year in the US. For next year, 2018, we do expect to see 3 further interest rate rises from the US. Now, after every Federal Reserve meeting, they do publish something called the dot plot, which is quite closely followed by investors. There are 16 members of the Federal Reserve Committee, and each one of them will vote according to where they think interest rates should be this year, next year, the year after that, and also for the longer term. All of those data points are put onto a chart, and it does give an idea of where interest rates will be in the future. This chart here shows the latest dot plot. So if you can see here for the year 2017, 16 dots on the chart, one for each member of the committee. They are all clustered just below the 1.5% mark. So that does demonstrate that the committee expects interest rates to be around that level towards the end of this year. For the longer term, you can see that the dots are clustered around the 3% level. So that's where the committee expects to see interest rates over the longer term. We have had one more key data point from the US this week, and that is US housing starts. This counts the number of new residential construction projects that have started during the month. It is a very closely followed figure, and it is counted as what we call a leading economic indicator. It is used as a measure of how strong the economy is, and people do consider it to be a forward-looking indicator. As you can see by the chart here, the figure has been rising slowly since the financial crisis, and yet the total number is still well below where we were in 2006. But the fact that it has been rising does mean that the economy is getting stronger, and the figure for this month was ahead of expectations, which is definitely a positive for the US. Moving on to the week ahead, we've just got 2 Killik stocks reporting, sports company Nike and consultancy firm Accenture. That's it from us. Have a great weekend, and we'll see you next Friday.